Hi everyone, this is Samir Singh Jaini from the Digital Fifth. Welcome on board to another knowledge session. I wouldn't say knowledge session because typically our sessions are very heavy and this one is not very heavy. It's more of what is happening in the market and analysis around that. So in today's session, I will focus a lot on what is happening in the market, what we had predicted earlier, where we have gone right and where we have gone wrong, and what do we see in future. So we'll mix it up with multiple pointers. Again, we'll run for say around 45 odd minutes, and what we will do is ensure that there is a placeholder for you to ask questions. So you can share your chat, your pointers back on chat back to me, and we'll respond back on that. So I think that should be okay. So we'll be happy to see your chats or questions coming up as such. And also, if you have any pointer coming up saying that this is what should cover in the future ones, we can do that. This deck will also be made available to you. So if you guys come back and ensure that there is you do a sort of question and answer or something, or maybe you give us a feedback, we will ensure that we'll respond back with a deck. So the feedback, if you provide back to us, Maitri will share the feedback back in this link, and we'll discuss about that, or we'll share the document across. So I think agenda for next 45 minutes to share this, and of course we are happy to take questions and answers, any thoughts you had, anything around that, right? So with this we start right away, and I'm really thankful for all of you joined in the evening today. It's actually 4 o'clock. I know this, as many of you will be looking at अरे यार वो weekend आ रहा है क्या करेंगे, but I think thank you for joining us, and we'll keep coming back with more such sessions, more such engagements as we go forward, right? So a quick view on who we are before we proceed. So when we started our firm almost 5 years back, actually it's fifth year which is getting completed. A lot of people are asking, hey, what is this hell, right? What are you saying you will build a fintech consulting firm? But I think we have been sort of a bit ahead of time, or a bit far ahead of time, but now it's playing out really, really well. And we're working with the best of the best guys, because everybody, bank or NBFCs or insurtech or wealth firm, everybody is becoming a fintech, right? Largely that. So we work with them. We work with, I mean, we may have one of the largest ecosystem in the country on the fintech side. We would have access to almost everyone in the market. So we do that. And in terms of work which we do a lot of work around consulting. And it can be about digital strategy, open banking strategy, or executing programs. In fact, recently we also did something else, which we are right now doing even a core banking program, which we thought we may not be doing, but yeah, we still have that engagement layer. And given that our background has been very deep into banking and fintech, I think this has worked well. And of course, we work with a lot of entities on embedded finance, a lot of people on digital lending, digital payments, well tech. So we work with bureaus, and we work with also networks. So that's been largely, and of course, a lot of times we consult with consulting firms as well, as they look at ideas and how do we go forward with it. So we work with many of them and guide on them on how to build an engagement layer. So we are consultant at times. We do a lot of partnership in the market, go to market, which we do for many platforms. On the training side, we will talk about we are right now about to start, maybe next month we'll start our long-term training, 4-month training, which is one of the best, and a lot of people have done exceedingly well from there. Some of them become founders, some of them have become digital leader in their own businesses. So a lot of action happening in the market around that, and there's a lot of work happening around hiring as well. So when we train a lot of people, we help in hiring as well in the market. So that's largely the business which we are in. And there's some set of customers we have, maybe large fintech like a JustPay, or a small finance bank, or a PSU bank, or a lot of embedded finance player, or a tech companies. We work across board with a lot of entities in the market. So I'll not press ahead. Let's come to the content right away. And of course, we work with a lot of clients worldwide. So it's not that we work in India. We work with a lot of entities worldwide. But let's come to the subject itself. Fabulous growth last year, right? I think we were saying that, okay, India was this okay market, and India was sort of almost flat or downward somewhere between 2017 to 20. I think ek saal ne sab kuch badal diya. 1 year has changed everything. Almost 7 billion worth of funding has happened in this year. Of course, we've worked for last 2 years on our own data, but before that we had picked up data from venture intelligence as well. So a lot of what we see right now is the market expanding at a very, very rapid pace. And we see more and more funding. So just imagine 1480 to almost 7 billion, 5 times growth in just 1 year. And the tide is not slowing down. If I look at, and we are not bringing that data, we'll come back to the data next month. But when we do monthly analysis, we are seeing that the trend is not going to ebb. We would see potentially 8 to 11 billion worth of funding happening in this year. So growth is not going to stop. And we will talk about which segment is growing and what numbers appear to be the case. But largely upward trends. And my personal take is that the tsunami is just started, right? I'm not saying that banks will do badly, not really. Even banks are benefited when this kind of engagement happens. But this is ridiculous growth. Nobody grows like that, which is what Indian fintech ecosystem is growing, and world is paying attention to it. In fact, interestingly, this is what we had predicted in December of 2020, that what will happen in the ecosystem. So as part of our annual report, we had predicted like this, and this presentation itself is part of our annual report, which is coming very, very soon in maybe next 3 to 4 days. So we had predicted that 200 odd entities will get funded in this year. We had predicted that 3 to 4 billion worth of funding will happen in this year. And when the market was down to 1.4 billion, I think when I was writing 3 to 4 billion, a lot of people are questioning that, yaar, hoga nahi, you guys are overestimating it. And I'm so happy to say that when we say 3 to 4 billion, we were off by a huge margin. It's 3 plus 4, 7 billion worth of funding has happened in this market, right? So that's a very positive trend. Also from a market perspective, we had predicted that SME neobanks, and let's look at bank open getting heavily funded, or lending fintech. I think lending fintechs have got massive funding in this year, and a lot of entities, while payments have got funded well, but a lot of lending fintechs got funded. Even payment got funded primarily for their lending businesses. From a razor pay perspective, difficult to say, should I call them a lender or should I call them a payment player? But yeah, that's what happened. InsurTech would grow, and that growth we have seen. Fintech enablers, a lot of platform businesses now, they can be all considered under open banking framework kind of stuff, but technically they are also an entity which have come in, and you have seen M2P and others, many of these platform players becoming very large. So we see open banking being a very scalable one in the market, and embedded finance will grow. So that's the prediction we had. And we had believed that anybody who's just running a marketplace without very deep engagement, or anybody doing a wealth tech, or anybody into retail and rec tech, these 4 segments, we're saying it will be upper niche, right? It will not go really scale. It will be upper niche, right? That's what we had predicted. Now, I'm honest that in terms of retail neobanking, of course, Jupiter has broken it. We have seen FamPay breaking it. So some of them have actually done exceedingly well. And therefore, there are flaws in my report or prediction last year. I think in some of these places, I was not very accurate. And on the wealth front, we have seen some of the wealth companies really scaling large. Grow has moved up, and many guys have moved up. So I think even Steven, we've got in terms of number of startups funding 200 plus. So the actual number is actually slightly ahead of 200, 205 or something. We had said 3 to 4 billion, actually 7 billion worth of funding has happened. We had said that these segments will grow. That has happened. But we had said that retail neobanking may not grow as much, but it did. Wealth tech has also grown well. So that's the thought process. This is again a prediction for last year, which is what we are right now reflecting upon in this year. In terms of unicorns, I think if you just look at the current data and the growth which we see, I think we have right now almost, and we were saying few years back that we have no fintech. 2017, when we started our practice, there was only one unicorn, which is Paytm. But since then, the market has been on fire. So 21 fintechs we see. Of course, give and take, you might reclassify some of them into fintech and some of them not in fintech. The numbers can be 1 or 2 here and there. But technically, the market has expanded a lot in 2020 and 21. Because of COVID, actually, the fintech has grown, digital ecosystem has grown. And anybody, I mean, look at the interesting part. 2 of them are pure manufacturers of insurance. Upstock is on the wealth side, which is stockbroking. Off business is again a slightly complicated business. They have off business, and then of course they are also doing supply chain related some other work as well. So CoinSwitch and CoinDCX is obviously on the blockchain and the crypto side. BharatPe has acquired a company. MobiKwik is heading well. While earlier we used to say that they have not been doing well, but they have come out of it. Cred is completely a different story. They came only in 2018, if I'm wrong. In 3 years, they become a unicorn. Z has moved from a completely different segment. They were more on the expense management or a meal side, something like that. We were on building on a prepaid kind of thing. From there, they went to core banking and platform business with HDFC and then grown. Slices maybe pure play on the lending fintech side. They may be the only unicorn there. They've done exceedingly well. 5-star can be classified as an NBFC as well. And Guru has been a story. I mean, I think we caught the story in 2018 when we saw their product and they were so well. And they just gone on strength to strength and kept growing. And of course, ChargeBee as well on the lending side. If you look at before that, obviously, Razorpay, Pine Labs, all these stories existed. Most of them on payment side, but of course, some on the Zerodha has been an outstanding place. And after Zerodha, suddenly you see both Grow and Upstocks coming in the similar segment based on stocks. I think this segment, and this is what I'm saying, that I was not exactly correct. I didn't catch the pointer right. But at this point of time, I'll pause. This is more of engaging, not that I'm perfectly right. There'll be some data points you may have extra. Any pointers, any questions you have, any thoughts you have on the market, how it will grow? I obviously will talk about the trends, talk about various initiatives which are happening in the market, but very happy to take any pointers, any questions you guys have right now. You can send it as a chat pointer back to me, or you can actually raise it right away. I'm happy to take both ways. If no, then I'll continue. But just look at the quantum. There were 7 sort of overall unicorns, and suddenly we have 14 happening in 1 year, and the trend is not going to slow down. We will see more and more as we go forward. These are the various largest of the funding which has happened during the year. And in terms of the size and the quantity it has kept on growing. The maximum funding round is with 375 million with Razorpay. From a few, I mean, they became a unicorn only a couple of years back, or maybe we are saying that they became a unicorn only, I think, last year, right? And then if you look at within the year, they have become $7.5 billion. And while I say so, I can tell you that I may be way off, right? Then you have an interesting company like BharatPe, getting funded, and of course they have also acquired a bank as well, PMC Bank, and started building it up. You see a story of Cred Avenue. Out of the blue, they came and raised $90 billion. So there's a very interesting story coming up. Despite all the pushbacks on in terms of blockchain and crypto, we still see a CoinSwitch Kuber raising so much of funds. Echo as well as Digit were clearly the winners in the insurtech and the manufacturing side. They have taken much of funding. Cred has been right now taking money. And the interesting part of all of that is, why are they taking it, right? So, I mean, initially Indian companies were taking money primarily for building Indian businesses largely, and in their own home territory, right? So let's say payment guy was doing payment. Now suddenly payment guy is taking more money, is because each of these guys who are taking money on the payment side is actually trying to take this money primarily to build something else. It can be a neobank, it can be the lending business, has to be something else, because their own business has reached a bit of maturity, and also they may not have more money coming up on the current business, right? So you can only scale that much. So one is to get into a slightly different business, at getting in with so much of data already on board with you. You know, you don't have an acquisition cost is almost come down to zero. You have also some data point underwriting as well. If with this you are actually getting into lending business, right? So very different business model which we see on the payment side. If you see, many of them are actually taking this money to get into foreign territories, right? So many of them are saying, okay, let me figure out, now that I have acquired so much of size in the country and I've raised so much of money, let me spend next few years building my business maybe in US, Europe, or some other country, or Middle East. So that's where you see M2P is going outside. We see Razorpay going outside. Pine Labs acquired Fave, right? So maybe next couple of weeks, we'll come back with a session primarily on the acquisition side, how the acquisition side has worked out, what kind of companies are getting bought, and who are the logical guys who will buy these companies as well, right? So that's another piece which we should look at. If you look at Slice, I think Slice is a outstanding case of a company which has been built ground up with a focus on one particular segment. They started from a student perspective, gone into professionals as maybe the founders also grew a bit. They became older, but they've gone after that segment really well. And I think in terms of their journeys, I think they right now have the best journey in the market on cards, and they are really a challenger for credit card, despite being on a prepaid platform. We have seen a Khata Book, again, as an open banking platform, getting into maybe neo banking and other spaces. Open has started with the idea that they will build the neo banking platform, and they work with a lot of entities. But they are now getting it with a Switch platform. They are getting purely on open banking and competing head on with the M2Ps of the world and all of that, right? So, which is again a healthy territory coming in. CoinDC is again a crypto. If you look at Credivenue is primarily building something on co-lending and debt market, right, which is not existing. And within that period, so Gaurav and his team, they were part of Vivriti. They knew what they were doing, and they've gone into Credivenue and built it so large. Again, a big. I think can you just check it out? Yeah. So Credivenue has built a debt-focused entity. One card, I think the way Anurag has moved ahead and built a platform, these co-founders have done a super job. We've not seen anybody building a credit card platform or business independently, because credit card was supposed to be a very complicated product. Technology was very expensive. Nobody had built ground-up platform, but which is what One Card has built. Again, a great story out there. Clear Tax has moved away from their business. Maybe they're more into now RegTech or open banking. Difficult to call out, but Clear has definitely moved into another direction. Uni, again, a founder, Nitin, building another company, and the second round company is much better than the first round. I think there's another trend. You build something. He was a founder of PayU, moved out of PayU, built and went with Ola Money for some time as CEO, moved out again and building Uni. And Uni is also making a lot of impact. Of course, it's not in insurtech, it's actually in lending. So that was a bit of an error on the slide, but that's about it. JustPay obviously is in payments. Again, they are also getting into lending. We see now a lot of movement on the lending side there as well. So that's again big one. Leaf Finance, another unique one which has entered, Zest, and all of them, right? And Fi again is which is what I was saying, that I've gone wrong in the retail lending. So retail neobank. So Fi has raised a lot of funds. And I will say open banking or neo banking together. So some of you will say, "Yaar, ye to open banking nahi hai, neo banking hai." But that's the same, right? At least structurally very similar. And of course, small case has been a big eye opener, the way they are building and everybody incorporating their product. And Simple is sort of between a buy now pay later. They were the ones who have been building for another last 7 years. I think 2015 onwards, Nitya and Chitra have built. And that segment has grown, and everybody talked about BNPL, but they were the original guys who built it. So this is interesting sort of numbers and ecosystem growth. Yeah, I think one question has come is future trends in the area of embedded finance and BNPL. I'll take this question as we go towards 10, but a very high level. I think embedded finance will grow. Our view is that 40% of the lending in the market, 40%, I think 40% number by 2000, maybe 26, 27. In next 5 to 6 years, we will have 40% of the business on the lending side, completely on the embedded finance side. And the hypothesis is based on the basic fact that payment has moved largely to a third-party platform. So embedded finance, embedded payment is already live and running, and most of the business happens on embedded finance, embedded payments. Lending will also go the same way, because OKN or account aggregate, all the frameworks are taking them towards that framework, which is API-based framework, which is going to come up. So we believe that's where we will go. And BNPL, personally, I have a view that we are unnecessarily making so much of noise about BNPL. BNPL as a tool to acquire a customer. BNPL is not a sustainable business. You will do BNPL and then try to sell newer products for it. That's how the segment will work. But unfortunately, what happens is that the way crypto started making noise, something happens in US and Europe, and we start copying randomly, right? I think BNPL has been in the business all the time. All merchants ever doing BNPL all the time. It's just that the way it has happened, and a lot of guys have done good work, be it lazy, be it simple. But I think it's overwritten. It's like this: when a trend move, say some trend happens somewhere, everybody wants to write. So we have overwritten on it, but the product is not very complex. It'll go ahead, but it's like the way credit card happened. It doesn't have a model of its own. It has to be reused completely. So BNPL will continue to remain, but basically BNPL to make money, the customer has to keep buying out on that platform, which is what it's like a credit card, right? So on a standalone, it may not work, but on long-term basis, if you can have a great engagement layer. And I was actually telling somebody today that if you have to create a best BNPL product, you need to ensure that the merchants are deeply engaged. So you can't say that I will not build for merchants. You need to be ensuring the merchants are extremely happy, because they are the ones who will embed you, because you are not using network generally. You are directly embedding yourself with merchants. So merchants have to be very happy with you. You need to ensure that you have something unique for the customer. Customer has to make money. Customer has to get some specific discount. Otherwise, they will not use just for convenience. I think it won't get used. It has to be more than that. And of course, you need to get lenders on board. If you're a fintech, you need lenders on board who will make their money. They will not leave it on the table. They will make money. And for that to happen, fourth one is you, which is the fintech. You have to fund it with your own capital and make it happen for that time, right? So I think, and over a period of time, you will also so fintech will fund all of these three initially, and over a period of time, you will also become happy because you will make money on the renewal basis. So that's how the market will grow over a period of time. I think same question is also asked by Ankit on BNPL and embedded finance. I responded back. I'll talk about the lending trends as we go forward. Generically, our report carries more of information. In fact, some of you can actually pick up our payment report, which came a week back. That has a lot of details about it. So with this, I will continue. Is anybody has any question to ask? You can even ask me on putting your video on, just introducing yourself and say your question. Otherwise, I'll jump to the next slides. And I acknowledge Uni is definitely not in short. Like Uni is a credit card product on prepaid. So I was talking about the number of funding which has happened in this period, and if you look at it in 2023-20, we had 133 entities getting funded, and this is our data. Maybe slightly here and there because we collect this data primarily on alternate sources, our network. But if there may be here and there possible, but otherwise. 204 companies got funded in this year. Now we had predicted 200. Very happy for the accuracy, but yeah, we were more gauging and thinking that the growth will be there in the market, and we'll continue to see more growth. Amount of funding, I think, if you look at generically, I think we had a cycle where because this was a time around April, June in 2020 when COVID had come, so immediate impact was everything shrunk, right? If you see this trend. Around March, or maybe Feb, March, we started hearing about COVID, and then the funding kept on going down from the previous quarter. But as we moved ahead, we saw a slight growth around October to November, December, and we were predicted around that we will see the cycle going up. But if you look at immediately, the cycle changed, and we moved from October, December, this quarter end, to the next quarter, January to March 2021. We sort of saw the sudden growth to 713 million. So this is 2020 and this is 2021. And since then it doubled, and then it almost tripled, and now it is flat. And we believe that this trend is going to be upward for a fairly long time. Because of the market is doing well, and generically also digital is just arrived in the market. And for a lot of foreign entities are looking at India as a net exporter of our product and technologies. And it's no longer about everybody talking about China. It's actually India business, which is maybe the best in the world on the payment and the lending business. InsurTech side is definitely, we are not ahead. Open banking and neo banking, we are definitely improving the fastest in the market. So maybe, and wealth, again, we have seen some progress, but we are ahead of the market on payments, lending, and maybe on these two areas. But for open banking, we are coming on par. Wealthtech and InsurTech, we are slightly behind the market. That's what we see as of now. In terms of number of startups which got funded, what is the typical sort of numbers? So we saw, I mean, the point is this tide is very, or say, across board. It's not a tide saying that only late stage companies are funded or there's early stage are funded. Nobody's putting money at various stages. There's a growth every level. So if you look at pre-series A, which means that seed funding and pre-series A, the number has grown up by almost 50% or maybe 40% or 30%. So we see growth here. We see growth everywhere, right? Series A, more growth. Series B, more growth. Series C, we have seen dramatic improvement. Basically, there are clear winners who have come out from last few years. They are getting funded well. So in D, E, and F, of course, we have seen a couple of IPOs as well in the year, which is both Policy Bazaar as well as Paytm getting to IPO, and more in the funnel as well. But we've seen this movement everywhere. The progresses, and generally, if you look at pre-series A, the funding is almost tripled, right? Which means that people are willing to put more money. I saw a lot of people now. Yesterday, I heard somebody picking up our friend Sagar creating a Beam Venture, which is only a fintech-oriented funds. Many more funds are getting created specifically focused on fintech. So fintech is on the rise. Series A almost 4 times, almost double for Series B. Series C further. I mean, this number is obviously incorrect, but the growth is very, very visible. It's almost 3 times. And then, of course, you have almost 10 times growth on the D, E, F, and G, where we have clearly seen some winners, and everybody is funding, going after those winners, right? So the growth is very, very visible. Any questions, any pointers? Of course, this number is not 457. We were basically creating it only yesterday night. So maybe my miss, 2 errors till now, but we'll catch up. The new version we'll have it all resolved. So I think pointer, I'm just saying, if you are early stage, don't be unhappy. Funding is around the corner. If you are a Series A funded, Series B is likely to happen if you are doing well. There are enough guys chasing the money, and we have seen people, bigger ones, also jumping in all the way till IPO, right? So money is not the biggest challenge you have. If you have great idea, great frameworks, things are happening. Okay, I'll continue with my pointers, and I know questions are still flowing in. I'll take those questions as we go forward. But yeah, in the interest of time, I'll just continue. So if you look at the segment-wise funding, again, if you look at it, payments has got a lot of funding. If you just look at the numbers, almost double the number of companies got funded. Even in lending, it's almost double. In open banking, the growth is limited. Number of companies is slightly higher. Wealthtech, much higher. And Wealthtech, I see the tide going in because everybody has now accepted that mutual fund is to be used only for customer acquisition. You need to find uniqueness in yourself, and many of them are finding that uniqueness. They're building something very unique. So the Wealthtech is now getting segregated. Nobody's earlier, the first version of, if you look at, we were seeing everybody launching a mutual fund platform because MF Utility or NSE or BSC Star, these APIs are available and you could build it on day one without doing too much of effort. But the entire engagement layer, marketing layer was missing, right? In the Wealth, super product, right? Super product. I myself use it and I find it beautifully done. And it does help you in engaging much better. Grow is super. So I see Wealth getting more funded as well. InsurTech, again, more funding happening there. RegTech, we realize that data, but what I have seen is the segment is not growing much. And very limited money is coming in. Maybe this is the year for RegTech. We've not seen much growth. While if you look at money, payment companies have got funded almost 9 times. Now, why are they funded? Because they're getting larger series of funds happening in this segment, and most of the funding is happening for either foreign expansion or helping these companies to sort of get into lending business and neo banking business. All of that. Very little money is going purely for building or scaling of the payment business because that's doing well. Lending business, I think while number of companies got funded was maximum on the lending side. Amount-wise, they are second largest, and there are reasons for it why this segment will be slightly more complicated if you don't have an engagement layer. Open banking has just zoomed up, right? Look at the amount increase, almost 3 times. Wealthtech, as I said, my prediction was wrong on Wealthtech. They've grown almost 8 times, and InsurTech has also grown. So these are 2 places. where we didn't get, or maybe insurance I get it, but wealth I did not get it as accurately. And of course, RegTech is on the funding side gone larger money, but number of companies got funded is much lesser. I think a lot of money is linked to Clear, which is also not classically a RegTech. It's somewhere in between Text plus, a lot of APIs they have. I've gone on and on. Let me try to respond back to some questions. And Maitri, can you just pass on the feedback form? And if you guys share your feedback form and respond back to the feedback form, we will share this deck back to you. And please use this data for whatever purposes you want to. I mean, as long as you code, that's fine with us, right? So we are not looking at beyond that. Yeah, the question, let me see. Kuldeep Parwar is asking, do you think rural digital payments and lending will see pick up? 100%. There's no reason why it would not happen. In fact, with a lot of platforms and digital happening, including the framework that AEPS exists, you have players like Spice Money there. I think they are also going to push. And of course, there's also embedded finance framework which will come up, that there'll be close tie-up the way you see startups tying up on the ground with a lot of dairies and offering credit to their farmers. You will see a lot of embedded finance there rather than a direct finance, because that's very complicated but it's not very cost efficient. So it will be best if you could tie up with the supply chain framework somewhere and build for it. The question is that you have all the players in urban environment. Do you think fintechs and rural players will see some light in the funding? I think, Kuldeep, it's happening. It's just that they're not showing on the bigger side. And maybe some of these activities are happening in the smaller towns as well. I mean, so much of work is happening even by Pay Nearby and others. So it will be, everything happens in the villages or all these inclusion area led by payment. So now payment is already there. Lending will also reach. So I'm not worried. I have been looking at IFL is investing in startups, and as part of that activity, I have met a lot of startups in the last few months. In fact, just one pointer: if you want to invest, you want to get funded, you can reach out to us as well. And we are working with IFL in their funding exercise. They have 100 crores fund to be deployed in early stage fintechs across board. So you can actually let us know for that, right? So maybe that's pretty fine. But lending is definitely happening. Funding is also happening in the rural areas as well. So it's not really correct that it's not reaching. It's just that it'll take some more time. And BC network players are definitely around, and more will come. You have FinPay and you have more and more players coming up in these areas as well. I think this is the same question which came again, so I'll skip this question. Do you think global macro factors, Fed tightening will reach to funds drying up? Okay, I'm not a big expert in what Fed does. What I do know that this inherent growth in fintech is really linked to how the environment exists today. So while Fed may or may not have impact, but in fact, I'm not the best guy. But I do know that sitting on the ground, working with so many fintechs, so many banks, and of course, talking to so many customers, I think there's only one way up. Now, if Fed reduces the increases, will the changes will happen to 5 to 8%? I don't know. But this tide is not going to stop for many, many years. I think my take is, as I used word somewhere, a tsunami is coming right now of fintech, right? It will not stop, because as I saw the data other day, only 2% of India's lending on the front bank side is digital. And that's RBI data, and 11% on NBFC. It is hardly there. So we just started. It's a long way to go. Even if every entire product is digital, even then I don't believe it will be. I'll be very happy, because it's a first iteration. If you believe that IMPS is the end of the world, not really. UPI is the end of the world, not really. We have to go to the next level, and it has to keep improving. We can't say that if checks have come, then the notes will go away. We have to find what checks were replaced by something else. So we need to keep improving. We are nowhere there. We don't have a very efficient payment system in India. I'm talking about on an overall basis. It may look like it is, and we can offline have a chat on that. But B2B payment is not solved. Retail also is complicated. A lot of people, my mother can't use apply and use UPI. It's very complicated for her. So we need to find new products as well. So we just started. So please don't assume that we will have any insurance also, right? Insurance tide is just started. You have credit card. We just started credit card. I think we have seen growth in the way Slice is growing. everybody will grow. BNPL is growing. So we are just at the starting page. It'll keep moving up. Then the question is on future of prop tech, which is what Nitin is asking. No, I'm not an expert in prop tech. I do know that there will be new innovations which will happen, which will have a fractional investment into property, but I'm not the best guy. How to reach out to at seed level? I think while at a seed level and all, there are a lot of angels working in the market. IFL will typically come at not at the maybe seed level, and I mean pre-series A level can come and they can come as series A level. So if you're looking at seed funding, please reach out and apply to us. You can fill that in the form as well, and we'll reach out and get you access to that. But if you're looking generally how the seed, I think it's a game of network. You need to be in the right network. Business will happen. You need to knowing somebody in the market, and there are a lot of influencers there who are helping a lot of people, and we can also help somewhere. We are not a funding expert, but we have access to the market. I think the question is, what is the evaluation criteria for pre-series A startup? I think framework is simple. I think people, first of all, invest in the founding team. If the founding team is really balanced, has the skill set on technology, product ideas, I think the fund, and of course, it will be great if you have done some work, invested some bit of your money. So your investor, the founders first, the amount of commitment they have, the MVP they have built, bit of money they have put on the table, and some success, and then you should get funding as well. And my request to everyone who can afford, let's say anybody who's in age of 40 coming out of corporate and starting a startup, they need to put their money on board. Otherwise, nobody else will put their money. So first seed for anybody who has some money, the investors will expect you to put the first money in before they throw their money in. So please provide your feedback back here. I think Maitri has given already a link back to you. To all those who will send the feedback, we'll share the deck as well. Please go ahead. Please share your feedback. Do we see consolidation happening across these vertical considering synergies that exist? Of course, it's bound to happen. We have seen credit going on buying spree. We have seen M2P moving ahead buying. We have seen Razorpay and Pine Labs, right? So we believe that acquisition is bound to happen. Those who are getting funded. Maitri, can you just ensure that everybody's on mute? Yeah. So if you see the growth in the market, funding in the market, a lot of funding is done also for acquisition as well. So last year, I think we'll come back with the analysis of funding last year, but I don't see that, and we have tons of deals which happened last year, so we don't see it ebbing as well. So people will acquire more and more entities as we go forward, and if you have more funding, you will go and acquire. And the startup is also happy, the smaller ones, that they're part of the larger business. They don't have to go again and again for funding, but they are part of the larger ecosystem, and they will grow as well. The question from Vivek Raja Gupta is, what do you think about neobanks? I think very, very high level neobanks will grow. There's no reason for them not to grow. MSMEs, I'm more keen that they will grow. MSMEs, if problems are not solved, most banks do not offer engaging platforms as well. So I think MSME will grow dramatically. We should even see somebody building for corporate as well, because corporate banking also sucks, right? Maybe they will do a connected banking really well done by a fintech. So maybe that space nobody has taken, saying that can somebody be the only guy playing the connected banking piece? I know one or two people are trying that out. On the retail neo-banking perspective, I think I would really urge, if you have the guts to do retail neo-banking, you should think that you have to become a unicorn in next 2 to 3 years or you're dead. So there's no space for Me Too guys in neo-banking on the retail side. Me Too or maybe a slow funded companies can exist on the MSME side because you can still make value. But retail is no way, right? Now the way Jupiter is rising and the way Neo is rising, you will see maybe 5 more unicorns coming in, but it's going to be a tough war because only few guys will survive. Maybe there will be a space for only 5 neobanks in the country, but on the lending side, you can have as many which can exist because there's a capital involved. So we see that. So let me just continue with this thread. I know more and more questions are coming. There's, I think, tons of engagement here. So tons of questions are coming, and we'll come back. And yeah, just one sec. Let me just continue on the amount of funding. So this is where we see, I think it's just more representation, but we believe that all the B2C startups and B2B startups and all of them have matured, and they will go primarily for, they already have engagement layer there, and they will go for more and more funding, primarily to get into a newer business, newer segments. Open banking, of course, we see that the tide is moving in the right direction. The traction is happening. Banks are also open to partnerships. As of now, we are working with few entities on the banking side and fintech side who are trying to engage closely. And this is the clear direction. In WellTech, I think winners already they are cited. Newer winners will come, but there's a very sharp funding which has happened to the winners. And you'll see more and more money going into it. And maybe somebody like a small case will become a unicorn and few more. So maybe Grow will become a decacorn. You don't know, right? But the era for decacorn is also coming very soon, even in wealth side. In terms of insurance, I think insurance is showing more growth as well, because insurance distribution as well as manufacturing both are an issue. We have seen on distribution side, Policy Bazaar growing, and you have on the manufacturing side, you have Digit as well as Echo growing, but more will happen now because it's just started. RegTech has scope to grow. I think it's just not happened enough. Maybe it's complicated. There are a lot of people at Series A level, in the RegTech side, but they are not able to get into Series B. So there's a gap which exists today, which has to be filled as well. And of course, we said that lending has seen the most. Just one second. Lending has seen the most number of startups receiving funding. So we have seen that. So that's continued to be the trend. Mehdi, just ensure that you share it back. I don't see it anymore, but you can send them the details, because some people are asking me, how do I get access to this deck? And just share feedback and tell them that in chat as well, that if you give feedback, we'll get it. Let's continue. Yeah. So if you look at the funding, and important that you should look at as an employee, you should look at as a founder, where do you put your company back, right? And if you look at the market, almost most of the funding, I think more than 50% of funding has actually gone to Bangalore. So Bangalore is a big hub where the money is growing, which means that if you are working out there, you will get better salary. If you are working out there, you have better access to talent as well, because these places are getting more and more numbers. I know my friends are also setting up, moving away from their town. So I think there's a different places where the growth is. And even when some of these startups who are based out of Mumbai, which is like let me not name, but many of them have dev center in Pune or in Bangalore, right? So I think important that Mumbai actually develops as a holistic level. Because of the lack of talent, it's not growing as fast as it should. And inherently sitting in Mumbai, I can tell you that when you go to the MBA colleges or other places, they have still no idea that what is fintech and what they can do. They're still trying to become an investment banker all the time, right? Whereas the salaries and the job opportunity and the quality of work may be equivalent or better in fintech. In terms of if you look at Gurgaon plus Delhi, I think together also the numbers are not very, very high. They are a distinct third. And then you have obviously just one sec. And you have obviously Chennai has got some funding, and primarily it's linked to credit revenue, making most of it. But yeah, some funding is happening even in Chennai, and we see more and more coming up. So this is largely the story for the location. So if you are in these locations, I mean, if you are trying to do business with them, I think you need to set up a base in Bangalore as well. And I know some of my friends have been traveling to Bangalore to do business. So Bangalore is the main hub, and rest all the money is split between Mumbai largely, and then some between Delhi and Chennai. What do we see in future, right? I think what we see in future, we see that the funding, at least in 2022, will further grow. So we had almost 7 billion. We see $9 to $11 billion worth of funding happening in this year. And number of startups which will get funded will also increase. Our belief is that in this year, every series will increase. Now, technically, the reason is this. Since the success has been seen the first pre-series, they will increase because number of entrepreneurs in the market is dramatically higher. And I can tell you on the ground, we meet so many people in the market who are now willing to start on their own. because there is no stigma, no issues, and also there are a lot of good money chasing them as well, saying that if you leave your corporate job, we'll fund you. So there's a both ways. There are more investors, ecosystem is ready, banks are ready, and the market is going well. So I think we see growth. We see growth across all series A, B, C, D. Everywhere you see growth in the market. We see a tsunami of fintech getting set up because of this reason, which means that we have right now large pool of potentially trained startup founders. It's very critical that people who have worked with larger fintechs, larger entities and startups have more inclination to, or more higher chance of building a successful company, because they know what it takes, right? Because they've learned from their founders, even if they were in the founding team, even if they were only developers, but even if they were a business analyst, they would have learned on the ground. So I think there's a large pool of companies, large pool of resources coming up, which was not the case. We don't have to hunt somewhere else. There's also generic positivity about these activities, be it Shark Tank or generically. At least people know what startups are, and it's no longer looking at kya kar raha hai, pagal bachcha, kya kar raha hai. So that has gone away. We see cutting edge tech stack as well available. So if you were to build a lending or credit card company, you can actually work with a platform company in the market. You can go to somebody else to do that. So there is a good level of ecosystem available which you can harness. And I think generically the amount of money required for setting the fintech is less. Of course, I'm not right now considering RBI license. If they come back and hit that license, that will be a bit of a game changer in the negative way. But long term, it will also help. But we see overall fund required is less in the market. And of course, one critical point is that there are also a lot of founders who have made wealth, right? So they have become angels, and all these founders like a Kunal Shah or Amrish Rao or a Jitendra Gupta, all of them are investing in startups and giving them more money because they know what to locate in founders, and they have higher chance of getting them success. They also have network which they can help with. So there is a pool of money which is coming into startups, even from successful startups as well, founders as well. So this is going to happen. I think banks and fintechs will foster growth in the market, and this is linked to they are willing to work with fintechs, largely bank. If you look at NBFCs or bank, or every progressive entity is working with fintechs largely. I think 5 years back, nobody has APIs. Now, for lending, nobody had APIs. Today, every bank is attempting to have APIs. At least there are 8 to 10 entities, banks and NBFC in the market who have stable APIs, who can scale. So, I mean, people like Credit Suisse or a DMI, or they are promoting this framework, or a Northern Arc or a Fivriti, they are helping the market with their APIs as well in the market. And there's also focus. So we work with a lot of entities, and we train a lot of entities in the market. We have seen that upskilling has become critical, and everybody's, a lot of the entities are working with us on educating their team members, top management, board, so that there's alignment on top to understand the market. So there's a lot of focus and support coming up. And today, at various levels, we have seen very young guys from banks are hired by fintechs, but they don't tend not to hire anybody more than maybe with 15 years of experience. But that's changing with many of these leaders getting into digital business, and digital business within the banking world getting more and more mature. Many of them will be available as a pool. So, for example, when we are training taking our courses, we get a lot of people with 15 years experience joining our course. But as part of this course, many of them actually move away and join a fintech as maybe a CXO, or some of them actually join within their bank. Recently, in this particular group which is running right now, one of them has taken a senior role within the own bank, but in digital transformation. So more and more people will get trained so that when they exit, they can become a founder, or they can join even a fintech. So availability of resources, which is a crunch right now, will tend to go away as the larger pool, which works in bank, will also get ready for fintech market. From a job perspective, I think more and more people are looking at fintech as a job. And we also believe that India is still at the first phase of fintech, right? It's not that everything has changed and all the innovation has happened, khatam ho gaya, kuch nahi ho sakta, nothing will happen now. Not really. We are at a very, very early stage. So this tide will continue for at least 8 to 10 years before it reaches any level of maturity. And that I mean that the day when we have you thinking of payment, lending, and all of that will go away. Maybe that's the day where fintech would have matured to some level. Otherwise, even today, you have to go through all the engagement for lending, payment, everything. You have to think through. Salary payment has to be processed properly. So you have to do NEFT. If you do reconciliation, you have to check who has paid. It's a disaster right now. So I think we have not built products largely for consumption. They are built independently. There's a lot of work still to be done. And in which way, this all of this content which we do is part of actually our training course which we take. And we actually built for that as well as we go forward. So maybe content wise, one of the best content which we have in the market. So we run a very sort of engaged 4-month course in fintech and open banking and financial blockchain. And where we take almost 50% courses, me, Shashank, the co-founders of the company. But we also get a lot of experts in the market, 30 plus experts come and take these sessions. So this is what differentiates our program from anybody else. Very deep, very use case driven. A lot of projects case studies which we do are very deep. The capstone projects are as good as the real companies. The content of the report is better than sometimes the company presentation, startup presentation we see in the market. And people participate like crazy. So the next one is coming up in February end. And if you are interested, please fill the form and we're happy to reach out to you. And of course, you want to do consulting with us, happy to take that as well. And we are obviously, if you want to reach out to us, please do reach out to us. We work very closely with the fintech ecosystem. Happy to work with you. Yeah. So with this, I'm come through with the formal session of it. Happy to take more questions. Just to ensure there is higher engagement, my suggestion is that if you have a question, you can actually open your video, ask your question, and in the meantime, I'll look at any question which I've seen here. I can respond back.
Yeah, Samir, I'm Praveen.
Hi, Praveen. Hello. How are you doing?
I'm doing good. Yeah. Samir, you've been talking about funding to one is about the fintech companies, which is something like a B2C level of things. So what about technology companies which develops this kind of applications, fintech, neo banking? So what is the level of funding which is coming to that kind of solution providers?
I think you have to look at the funding which has happened to Zeta or M2P or in a sense, Credivenue as well, right? There are tech platforms gaining traction. We have seen Hyperverse getting funded. We have seen Upswing getting funded. So the focus on platform has also increased. So we do believe that anybody who can build scalable digital platforms will also scale. So one of the theses we have is that innovation is moving from front end to back end. So if you can build a maybe world's best core banking platform with focus on India and then take it away outside of India, I think you will become a unicorn faster than you could, because most core banking platform, at least most of them, are still in the old world and they need to get upgraded or they need to have another revamp. So I do believe there is space for you to enter and build for it. So money is on the table. A lot of people are looking at such platforms, but again, they're looking at quality, ability to scale, ability to build products around that, and the funding is just round the corner.
Okay. Thanks, Samir. Thank you.
Yeah, and there are many investors who are looking at primarily B2B companies on the technology side, deep tech. So there are very focused entities doing it. So yeah, if you have one, you should be able to get it. But again, traction, scalability, all of that has to be looked at.
Thanks a lot, Samir.
Yeah. Any other question from anyone? Okay, so I think somebody was asking how much this course costs. I think you can, you can reach out to us. You can reach out to me or my co-founders. You can reach out to, or maybe you can fill in the form right away, and we will reach out to you. So that's an option we've given. We will reach out to you and discuss. I think I saw another question coming up from Nitish. Nitish, you go ahead and ask your question, because that will help in engagement, because otherwise I'll end up reading and then responding. Happy to take your question, please.
Yeah. Good evening, Samir. Good evening, everyone. So, Samir, just wanted to understand.
Nitish, could you just tell me from where you come? I mean, where do you work, so that we have a context?
Yeah. So, Samir, we have interacted before during my last program, which was advanced lending program with Digital Fifth last year. I have worked with a fintech which was incubated at IIT Delhi for a year, and then after that I moved on to work with another fintech called India Lens. I
Okay.
worked with them for 6 years, and recently, been a couple of months, I've joined MobiKwik as somebody to look after the lending business, which is primarily BNPL slash shop on EMI product.
Excellent.
Yeah. So Samir, very specifically wanted to ask, what are your thoughts on the guidelines that have come on 5th of January on the soft pull slash hard pull, different interpretation to that from the RBI, and how do you see this sort of leveraging fintech getting into, especially who are into risk sharing model or sort of taking end-to-end responsibilities on the lending front, and where the lenders are just supplying, especially those kind of models. How do you think? How do you see these guidelines sort of coming into picture?
So two parts, right? First, my understanding is that a soft pull is permitted as long as your entity is registered. Some frameworks are there, but you can
Yeah.
pull based on customer consent. So that message has already come out very clearly. So that's open, and I think that's my understanding. That's how my customers are working, and that's how the market is moving. Earlier it was saying कर सकते हैं नहीं कर सकते, that issue is over. They have said that it can be done. So RBI technically is promoting innovation in the market. Part two, uh, in terms of you. So your question was that FLDG and all that framework is what how it will
Yeah, yeah.
work.
So Samir, soft pull definitely yes, it is. It is a practice in the market. When you take a consent, you can just always on the D2C front, you can always collaborate with the bureaus. It was more. Different interpretations are also regarding allowing fintech after becoming, say, specified users with the bureaus on the hard pull front. And there's a different category of users which has been defined, which is a big break actually
Correct.
in a way. Yeah.
Correct. So I think I'll not go into it, but I'll maybe answer to the other question, which is FLDG framework. I think my pointer, and you read it in that RBI was saying that they are not very happy with this synthetic product called FLDG. But technically, FLDG has been, in a sense, accepted as a practice for last 16 years in the BC business. And there's no reason why it cannot exist in a fintech business, because BC business, fintech business, same framework, right? Digital kar diya to illegal and physical to illegal, right? That doesn't work. So
Sure.
I think my take is that it will continue, but maybe they will define that FLDG will be, say, up till 10% or 20%. They will define some numbers to it. But anybody doing 100% FLDG and all of that, I think that has to go, right? It was a sheer illegal and distribution of your a license to other people, as if that you are the second regulator and that I will pass on my balance sheet to anyone. I think that is going away. So which is what RBI said. Now they have said FLDG is not going to be technically not right, but when they come back with the regulation, I do hope that they will allow FLDG to some extent, with 10 to 20%, and beyond that, they will expect you to become an NBFC and have a co-lending framework. So there will be a graduation from 0 to 20% with FLDG, and beyond that, there'll be a transition to a co-lending you can do.
Sure. Thank you. Thank you, Sunil.
Yeah. Any other questions, guys? Happy to take your question directly. And again, as I said, if you want this document, please reach out. We'll share it back to you. There's also other reports on payment and all we have done, so you can access some of them on our website as well, if that be so. If no, I think let me see if I can answer one more question. Let me see one more question. Can we expect to see regulation kicking for digital? Of course, the question was, yeah, go ahead.
Sir, can I raise a question? So,
Yeah, go ahead.
yeah. So I was thinking for an account aggregator thing, kind of a thing, and building a fintech on the basis of a account aggregator. So how do you think that will this idea work?
No, you want to build an account aggregator, or you want to build a layer on top around account aggregator, which is the data analytics layer?
Yeah, data analytics layer to provide services. There would be account aggregator. We can link with every account aggregator. So why to become an account aggregator? That's the basic data collection layer. So what's the benefit?
No, I think look, in most of the cases on fintech in all these areas, it's better to think for maybe 2-3 months and then do it, because this opportunity exists for maybe next 1 or 2 years or 3 years. We have seen already, if you look at the account aggregator platform, you go to Sehmati. As of now, they have multiple layers, right? There are players coming as data layer framework. So there are people who are creating data layer, which is the bridge between a bank and account aggregators. There are layers coming in there. And you look at the analytics side, at least there are 50 odd players trying to do. I think the thing you need to do is bring your innovation, bring your framework, get your customers upfront, start the POC and all of that. So I think there's business definitely on there. But I think fintech is a game of aggression and making it happen. So I think it's worth it. The market is just opening up. And
yes, so being a chartered accountant firm, I am a chartered accountant. So being a chartered accountant firm, we have a whole lot of client base and doing investment, lending, every bit, and insurance. We are into doing all these services. So maybe with this layer, we can expand our horizon also.
absolutely. Absolutely, you can. Absolutely, you can. In fact, one question is just common is that, I mean, do you work on embedded finance area? I think from a consulting side, we've done maybe 6 to 8 consulting assignments purely on embedded finance area. And that has been the rock solid way of scaling up. So our clients have done really well. So that's a good area for us to work with you if you are trying to build that. But of course, we can work on digital transformation. If you're a bank, we can work on that. If you want to build digital strategy, if you want to build maybe a sort of, if you want to compare yourself to the market insights, we can work on any one of them. So I think there's a lot of action which we are working in the market across board. And of course, somebody was asking where can we meet? I think we are based out of Mumbai, but we have office or see very senior person, funny sitting out of Bangalore as well. So you can meet us in Mumbai and Bangalore. Of course, we travel a lot. So you can find us in maybe Chennai and Bangalore as we travel more and more. But yeah, primarily based out of Mumbai. Any other question before we close, guys? If no, then we close now. Thank you for your support. We will be coming back with another set of session mostly next week. We will be potentially have a lot of reports coming up. So there's a next report which is coming up, which is purely focused on only on the year round what has happened last year. So this is a part of that series, which is funding is just part of it, but it will be a lot of trends and all will get captured and a lot of analysis on the acquisition. Each segment will get deciphered. Old report you obviously can pick up from the website, but next will come will soon. We're also doing a course primarily focused on digital strategy, right? How do you build strategy? How do you go about building the architecture process? So it's actually going to be a 5 hours course or 5 to 6 hours course, same day course coming up by end of next month. And after that, we obviously will start our anchor course, which is what I was talking about, that we'll have anchor course coming up, which is executive program in fintech, open banking, and financial blockchain. I think, to be honest, while we don't boast that we are best in everywhere, but this area we are super. So this, if you join here, you will have sort of one of the best experience in the market on how the fintechs and open banking and everything is evolving and improving. So with this, we stop. Thank you guys for being there. Hope to meet you again. Thank you. See you guys. Bye.